Could one executive order completely shift the future of crypto in the United States? In today's video, we're breaking down how Trump's new digital asset order could unlock serious momentum for crypto. If the promises play out, we'll walk through what's in the order, why it matters, and how it could ignite a new wave of adoption and innovation. Whether you're a long-term investor or just watching the political winds, this is a moment that could reshape the landscape fast. Stick around because understanding these changes could help you get ahead of the next major crypto surge. Let's get into it. What is Trump's Digital Asset Executive Order? Trump's Digital Asset Executive Order sets a new tone for crypto policy in America. It focuses on creating a unified framework for digital asset regulation, promoting innovation while ensuring investor protection. The order outlines initiatives for defining digital assets clearly, coordinating regulatory agencies, and encouraging domestic blockchain development. It signals a shift from restrictive, piecemeal regulations toward a more proactive strategy that embraces the financial and technological future. By recognizing digital assets as a strategic sector, Trump's move positions the United States to reclaim leadership in the global crypto race. The order isn't just words. It's a roadmap for rapid growth, regulatory clarity, and financial modernization. From hostile to friendly, a new tone for crypto regulation. Crypto policy under previous administrations often felt adversarial, with regulators treating blockchain innovation as a threat. Trump's digital asset order flips that script. The new tone is collaborative, recognizing crypto as a strategic advantage rather than a systemic risk. Regulators are tasked with supporting growth while establishing smart guardrails. This shift reduces the fear factor for institutions, startups, and everyday investors alike. By embracing crypto's potential instead of just policing it, Washington could finally create an environment where builders, investors, and innovators thrive without feeling like they're fighting the system. A friendly policy approach could be the catalyst crypto has been waiting for. Defining digital assets. Why clarity is everything. Clear legal definitions might sound boring, but they're game-changing for crypto's future. Until now, ambiguity around whether digital assets were securities, commodities, or something else has fueled regulatory confusion and stifled growth. Trump's order demands clear definitions for Bitcoin, Ethereum, stablecoins, and other major asset types. That clarity allows exchanges, custodians, asset managers, and investors to operate without constant fear of regulatory whiplash. It also makes it easier for new products, like ETFs and digital bonds, to get approved. A stable regulatory environment invites serious capital to enter the space. Without clarity, crypto remains risky. With it, the floodgates can open. SEC and CFTC realignment, cleaning up the regulatory mess. Right now, crypto regulation is a tug-of-war between agencies like the SEC and the CFTC. Trump's executive order aims to fix that by clearly defining who oversees what. Under the proposed plan, the SEC would regulate assets that behave like securities, while the CFTC would oversee commodities like Bitcoin and Ethereum. Clear jurisdictional boundaries reduce overlap, lawsuits, and uncertainty. This streamlining could fast-track innovation and make compliance more predictable for businesses. No more endless courtroom battles over technicalities. Investors will know who's protecting their interests and companies will know the rules of the game. A major win for the entire ecosystem. Stablecoins get a green light. Stablecoins have been one of crypto's fastest-growing sectors, but also one of its most controversial. Trump's order proposes clear licensing frameworks that support regulated stablecoins while cracking down on risky, unbacked versions. This creates a pathway for banks and fintech companies to issue compliant stablecoins safely. With clear rules in place, stablecoins could rapidly integrate into payment systems, cross-border remittances, and even government-backed programs. Analysts believe that legitimizing stablecoins could inject new liquidity into the crypto market and strengthen its ties to the traditional financial world. It's a move that doesn't just boost crypto, it transforms how global money flows. Institutional onboarding. Why Wall Street could move faster. Institutions have been cautiously dipping their toes into crypto, but regulatory uncertainty held them back. Trump's new order could finally break the dam. With clear asset classifications, defined agency oversight, and a supportive policy framework, major banks, pension funds, and asset managers now have a green light to dive deeper. Products like Bitcoin ETFs, ETH staking funds, and tokenized asset platforms could scale dramatically. Institutional money doesn't just stabilize markets, it amplifies them. Expect bigger inflows, more professional custody services, and mainstream acceptance of crypto as a standard portfolio asset class. Wall Street's full embrace could be the next big catalyst. Innovation zones, special crypto-friendly states. Another bold piece of Trump's strategy is the proposal for blockchain innovation zones. These would be special economic areas where crypto startups enjoy favorable regulations, tax breaks, and faster approvals. States like Wyoming, Texas, and Florida are already positioning themselves as candidates. Innovation zones could spark massive competition among states to attract blockchain talent and investment. Entrepreneurs, developers, and venture capital firms would have a home base to build without the regulatory friction seen in legacy financial centers. This could supercharge America's crypto leadership, while also creating thousands of jobs in new financial and tech industries over the next decade. Tax breaks and incentives for blockchain startups. Building on the innovation zone concept, Trump's order hints at tax incentives specifically aimed at blockchain startups. These could include capital gains tax deferrals, tax credits for R&D spending, and deductions for blockchain infrastructure development. For entrepreneurs, this massively lowers the financial barriers to entry. For investors, it makes backing early-stage blockchain companies far more attractive. A friendlier tax landscape could reverse the brain drain we've seen in crypto, where top talent and capital moved offshore to friendlier jurisdictions. If implemented correctly, these incentives could set off a startup boom similar to what Silicon Valley experienced during the early tech wave. Risks and wildcards. What could still go wrong? While the executive order paints a bullish picture, risks still loom large. A change in administration, political backlash, or activist regulators could delay or dismantle parts of the plan. Execution details matter. Sloppy rollouts could cause new confusion rather than clarity. Lobbying pressure from traditional finance could water down the more progressive parts of the order. Plus, international regulatory tensions could complicate cross-border operations. Analysts also warn that over-regulation under the guise of clarity could stifle smaller players. While the order is a strong positive signal, crypto investors and builders should stay agile and ready for shifts. Big picture: how the executive order could reshape the next crypto supercycle. If Trump's digital asset order is executed well, it could be the spark that ignites the next major crypto supercycle. Regulatory clarity, institutional acceptance, tax incentives, and innovation hubs would create an environment where crypto doesn't just survive. This isn't just about price action, it's about positioning crypto as a core pillar of the future global economy. Trump's digital asset order isn't just political news, it's a potential inflection point for the future of finance. Thanks for hanging out with me here at Nexus Dividends. If you found this breakdown valuable, smash that like button, comment your take on the executive order, and subscribe for more real-world, fact-first crypto and investing insights. Stay sharp, stay strategic, and I'll see you in the next one.